Welcome back to our Clean Technology Investment Tax Credit series. In this video, we're diving into the prevailing wage requirements, one of the two key labor standards that you must meet to claim the full 30% of the Clean Technology Investment Tax Credit, also known as the CT ITC. If you haven't already, check out the first video in this series where we walk through a general overview of the CT ITC. Under the CT ITC, prevailing wages refers to the wages and benefits that must be paid to covered workers involved in the preparation or installation of clean technology property. A covered worker is defined as someone performing manual or physical work related to clean technology installation. This does not include anyone in an administrative, clerical, or executive role, alongside business visitors under Section 187 of the Immigration and Refugee Protection Regulations. Prevailing wages must be based on one of the following. 1. An eligible collective agreement, which is the most recent multi-employer agreement negotiated with a trade union affiliated with Canada's building trades unions, or the relevant trade and region. Or 2. A project labor agreement, which is established with a trade union under provincial law and covers the work associated with the ITC eligible investment. This agreement must offer wages and benefits at least equal to those in the applicable ECA. If no ECA is available, you must use the agreement that most closely aligns with the worker's scope of work and location. Covered workers must be compensated with regular wages, excluding overtime, and benefits like vacation, pension, health, and welfare. These must match or exceed the standards set in the applicable ECA or project labor agreement. Contractors have several responsibilities. This includes maintaining payroll records for all covered workers, documentation of the ECA or project labor agreement used, including names of ECAs obtained, wage schedules considered, reasoning for selection, and proof that the ECA is active and not expired. Contractors must also keep records of efforts to inform subcontractors and tiered contractors of the requirements on the projects, documentation of how wage information was communicated to workers, and confirmation that prevailing wage requirements were met, starting November 28, 2023, for projects already under construction. If you're seeking ECAs for your project, they can be accessed through Canada's Building Trades Union's website. You may also contact trade unions directly for the most up-to-date agreements. Compliance with these requirements isn't only necessary to obtain the tax credit. Failure to comply can result in dire consequences. This includes daily penalties of $20 per affected worker per day as of 2023, required top-up payments to workers, a 120% penalty if top-ups aren't paid within 1 year, and disqualification from the full credit rate if gross negligence is found. We'll discuss more on penalties, how they vary, and best practices in a later video. To avoid these consequences, remain informed on the prevailing wage requirements and maintain a detailed paper trail of all the work you've done to commit to the requirements. In case you need any further help, our team is here for you. Reach out if you have any questions or would like insights from our experts.
Thank you for watching this video. If you need further help or have prevailing wage questions, feel free to give us a call or reach out to us through our website. You can also follow us on our social media platforms for any future updates. Here at Alliant, we'll help you get compliant.